Welcome back, guys. Today, we are diving deep into the heart of the U.S. real estate crisis, exploring the burning question: will the Dallas housing market crash? The U.S. housing market has been a roller coaster, with a supply shortage driving prices to unprecedented heights. I looked into some exclusive housing data from Redfin, and it's definitely revealing some intriguing trends in the Dallas metro area. Buckle up as we analyze the numbers from the peak median sale price of $463,000 in May of 2022 to a 7.1% drop to $430,000 in May of 2023, and the latest median price of $425,000 in August of 2023. Is this the sign of normalization or a potential market shift? Stick around as we dissect the data and expert opinions to uncover the future of Dallas real estate. I think anybody from Dallas would definitely agree. The lack of housing, especially affordable housing in the area, it's a growing concern. Check this out.
A recent report from the group says the city of Dallas is lacking nearly 34,000 affordable housing units for households with low incomes. And by the year 2030, that gap is expected to grow by 50,000 units.
Putting new units on the ground is a really complex process.
Within the city, Districts 8, 10, 3, and 7 have the highest percentage of cost-burdened renters. So what does that mean? Well, it means this percentage of people in these areas pay 30% or more of their salaries on rent.
There are renters who are housing cost burden all over the city, but we definitely see a disproportionate share of housing cost burden renters in parts of the southern sector.
It's no mystery that the U.S. housing market is grappling with a supply challenge. The scarcity of homes up for sale, it has significantly fueled the surge in prices over the past few years. In fact, in certain markets, we're seeing dozens of bids pushing prices to record highs. On the other end of the spectrum, you have places like Forney, Texas, where, yes, so many constructions are happening all around, but the main problem is that nobody wants to live in Forney. Schools aren't the best in that area. Traffic's always a problem on Highway 80 and Road 548. The only reason why they say that people stay there is because they're trapped and they can't really sell their existing homes because of all of these different factors. Now, as for the U.S. in general, despite the optimism earlier in this year that fresh construction would bring some relief to the supply crunch, the latest updates have been a little bit of a mixed bag. Things looked up for residential construction in May of 2023, but just a month later, the opposite happened and we hit a snag in terms of the housing starts. In June, housing starts took a nosedive by 8.1% compared to the previous year, landing a seasonally adjusted annual rate of 1.43 million below the anticipated 1.48 million according to Census Bureau data. So it seems like home builders are still struggling with the usual suspects: soaring mortgage rates, steep construction costs, and a shortage of available land. Then again, we never expected a flood of new houses to magically fix a market troubled by low inventory, pricey homes, and high rates. At the very least, it has been making some headway this year. Especially noteworthy is the fact that the median price for a new home has actually seen a dip. But really, housing shortages can vary wildly depending upon where you live. Bank of America did a recent housing analysis and found some very interesting trends. Turns out, certain Sunbelt markets are seeing the most severe housing shortages tend to be severe in certain Sunbelt markets where the problem is less pronounced in large Midwestern cities. They dove into migration flows using their own data and housing stock, and the insights were eye-opening. In the second quarter, 4 cities faced the toughest supply crunch. Surprise, surprise, 3 were in Texas: San Antonio, Dallas, and Houston, with Orlando, Florida joining the club. Now on the flip side, St. Louis, Detroit, and Miami seem to have more houses than hands to fill them. The silver lining? Cities with lower housing supply are already seeing higher construction trends, but if the current population dynamics are maintained, there will continue to be a strong housing need in the growing parts of the country. Bank of America even categorized these markets into 4 quadrants: hot, warm, cool, and cold. So let's go ahead and break it down. Hot markets are those with low housing stock and population inflow, including San Antonio, Dallas, Houston, Orlando, and Las Vegas. Warm markets feature high housing stock with population inflow, including Tampa and Jacksonville, Florida. Cool markets have low housing stock and population outflow, including Los Angeles and Baltimore. Cold markets have high housing stock and population outflow, including St. Louis, Detroit, and Miami. What's drawing folks to these hotspots? Well, apparently it's the booming labor markets outdoing the national average. But all this demand, it's driving home prices through the roof. A 58% jump in Orlando and a 49% hike in Dallas between June 2019 and June 2023. So if you're looking for a house in these hot markets, brace yourself. Waiting for supply to match demand, it might mean a very long game. The big question hanging over it all, can supply keep pace with this influx, especially if the inward migration trends are sustained in these growing parts of the country? If not, that housing demand won't be cooling off anytime soon. No wonder Business Insider put Dallas, Texas as number 2 on their list of top 10 real estate markets as home sales surge in 2024. In Dallas, Texas, the home price growth for 2023 stands at 1.9%, making it a market to watch. Plus, a notable 21.5% of renters in the area can afford to purchase a home at the median price. Additionally, if mortgage rates see a decline, an estimated 4.9% of returning buyers could potentially enter the market. Also to take note of, among the 100 largest metro areas, Dallas boasts the second fastest growing job market, generating over 4% more jobs than the previous year. This robust local economy, coupled with a relatively sizable portion of renters with the financial capability to become homeowners, suggests a potential uptick in housing activity, particularly if mortgage rates decrease in 2024. So with all of this demand but supply barely able to keep up, will this whole thing implode in on itself? And we get to the question of, will the Dallas housing market crash? We'll get to that answer in just a moment, but first, I just want to say a quick thanks to you guys for always supporting the channel and for always watching our videos and for lighting up the like button. I definitely couldn't do any of this without you guys. So thanks a lot, and if you haven't yet, I highly recommend subscribing to the channel and tapping that notification bell. It's absolutely free, you guys. You get to stay updated on the latest content. And by the way, if you own a home, make sure your home is protected. Get your absolutely free home warranty quote. There's a link in the description down below this video. It only takes about 10 seconds. Now, let's continue. So Texas is a hotspot of population growth, with cities like Austin, San Antonio, and Houston witnessing significant population spikes over the past decade, at least according to the 2020 decennial census. Austin, in particular, has a remarkable 21.7% surge, reaching 961,855 residents in 2020 from 790,390 in 2010. Similarly, San Antonio's population increased by 8.1% and Houston's by 9.8%. And as you can imagine, these demographic shifts have fueled some very dynamic housing markets across the state. As we're exiting the fourth quarter of 2023 and with 2024 looming, the future holds a lot of uncertainties for Americans, including the potential for an economic recession and the upcoming presidential election in November 2024. General financial advice says to normalize a simple lifestyle and stop normalizing debt. Huge SUVs, huge houses, and private universities are simply not necessary. Living within their budget helps a lot of people sleep better at night, knowing that if they lose their job tomorrow, they'll be just fine. All because they didn't give in to the temptation of buying the biggest house and instead listen to some practical real estate advice about buying the one that they could afford comfortably so that they can repay off the mortgage. Now, on that note, we're turning our attention to the Dallas housing market along with 22 other major cities in the Dallas metro area. So we're going to delve into these markets, analyzing the factors such as median sales price, home sales volume, new listings, available inventory, median days on the market, sales to list ratio, and of course the percentage of active listings with price drops. All this data comes straight from Redfin, spanning from August 2018 to the most recent month with available data, August 2023. So first, a Dallas housing market 2023 overview. Some interesting trends that we've been spotting after crunching the numbers from Redfin. Seems like there's a bit of a reset happening in home prices and kind of a return to normalcy after the roller coaster of pandemic years and pre-pandemic times. Is this the Dallas housing market crash that people have been talking about? Well, let's take a look. Back in May of 2022, the median sales price hit a peak at a pretty steep $463,000. Fast forward to May 2023, and that figure took a dip down 7.1% to $430,000. As of August 2023, the median sales price stands at $425,000, only a modest 1.1% drop from the $429,000 mark in August of 2022. The city of Dallas proper followed a very similar trajectory, hitting a record high of $488,000 in May of 2022. Prices have been on a gradual decline. From $405,000 in August 2022, they dipped a very subtle 1.3% to $399,900 by August of 2023. But when you zoom out a bit, it's worth noting that Dallas home prices still stand significantly above pre-pandemic levels. August 2018, the median sales price was $292,250. Since then, it's been on a steady climb, even during the pandemic onset in March of 2020, when the median sales price rose to $340,000 in April of 2020. Dallas home prices have held strong, never slipping below $300,000, not even during the quieter months like January of 2021, when the median sales price settled at $325,000. Now, taking a broader look, 12-month average median sales price from September 2022 to August 2023 in Dallas sits at $400,410. So, while there's been a bit of a recalibration, Dallas real estate is still standing tall. Here's a chart detailing the changes in home prices for Dallas, the metro area, and Texas overall. Now, with that being said, let's talk about the big question looming over the Dallas housing market. Is a crash on the horizon? Well, according to the data, it seems like we can put those crash concerns to rest. Sure, there's been a bit of a slowdown on the housing market activity, par for the course in many US markets, but a full-blown crash? Not so much. One crucial factor here is the mortgage landscape. The majority of today's homeowners secured their mortgages during a low Fed funds rate era of the 2010s. Back then, interest rates were slashed across the board to fuel recovery from the global financial crisis. Unlike the adjustable rate mortgages of the housing bubble era, which hit homeowners very hard when they reset at higher rates, today's homeowners are less likely to face that level of repayment shock. Now, as for the housing bubble other channels keep talking about, I'm sorry guys, but the telltale signs just aren't there in the data. Unlike a classic bubble scenario, most of the Dallas housing market isn't seeing a buildup of housing inventory. Even though some cities in the greater Dallas area experience a year-over-year dip in monthly home sales, this trend extends back to the pre-pandemic days in 2018. Here's another pointer. Home prices. Typically, in a bubble, you'd expect a surge in the sales to list ratio, indicating final sales prices way above the initial list price. But in the Dallas housing market, as of August 2022, most cities had sales to list ratios just slightly above 100%. And a year earlier in August 2023, while those ratios might have dipped just a little bit, they're still hanging close to that 100% mark. So, all in all, the signs are not pointing toward a crash or a bubble in the Dallas housing market. Anybody watching this video from Dallas care to weigh in? I'd love to hear some genuine, authentic boots on the ground information from you guys, whether you're in Dallas or any other area of the country for that matter. Let's get a conversation going so that we can really see the big picture of what's happening in the housing market in our country. Drop those comments down below, guys, and we'll pick it up on the next video. More exciting analysis and financial insights to come. I'll see you on the next documentary.